what I wanted to do today, we had a little couple itty bitty changes to plan A. Let's go over the changes to plan A. And then let's run through as if we were looking to trade plan A. Does that sound good? If that sounds good, put a thumbs up emoji in the chat. If that sounds good to you, put a thumbs up emoji in the chat. But let's talk about the tiny itty bitty changes. Joe is still removing his pants. Yes, exactly. That's why he's not here yet. We are at the club, and he needs to find his strobe light. Launchpad McQuack with the thumbs up. Plan A plus. Oh, I like that. Rasmus, thank you, my friend. I don't know why I came through as text, but I got where you're going with that. Thank you, man, dude. All right, very cool. Matt Barnes, Houston real estate broker. Everybody, if you are in Houston, go find Matt and let him be your real estate broker. There you go, Matt. I plugged you. Free of charge. Free of charge. Ozzy Ian's got the thumbs up. All right. Michael Ross, the boss, had a really good question. Tell you what, Mike, do me a favor. If you can share as much detail as you can about those trades you want to roll, let's cover that. I got you. I got you, my friend. He is the boss. So what can I say? What can I say? You're welcome, Matt. I'm glad you're here, dude. Jamie's here, and I know it's Jamie this time and not Jaime. Well, can you blame me? What can you say? All right. So tiny itty bitty changes to plan A. Let's zoom in. Let's zoom in. Itty bitty baby changes to plan A. I don't know if I mentioned this yesterday, but I still want to sort by highest percent return and then work our way down. Now, granted, I'm only going to take the top 10 per day. Scott's been doing lots of back testing, and there are potentially, there's one day that had 107 setups. That's far too many. Ain't nobody got time to make 107 trades in a single day. Most of them had somewhere between 10 and 30. Ain't nobody got time for 10 or 20, 10 to 30 trades a day. So we're only going to be looking at the top 10. Okay, top 10 by historical ranking. Now, does that mean that we won't take trades because number 11 is actually the one that has like the right options, liquidity, and stuff like that? That's very possible, and that's also part of the game, right? So that's one tiny rule that I want to add to it. I mentioned this morning a tiny rule change over $10 only for options availability. It's not about liquidity. It's not about anything else. It's the fact that a lot of stocks that are under $10, they don't even have options. Or if they do, there's nobody trading them. So it's like, okay, we're not going to be snobs anymore. We're going to be I don't know. What is a less snobby word for snob? I don't know. I don't know. But the sole reason is $10 for options availability. Let's see. All right. Now, this is new. This is brand new, hot off the press. I was thinking earlier today, I was chatting with Scott, and some of the things that I found, as we've gone through, were some losing streaks. And I got to thinking, Scott, one thing I want to do is increase win rates. This is actually really, really cool, by the way. Hang on. I'm going to have to obfuscate some of the data. But once you see why this is so cool, you'll be like, whoa, this is a big deal. This is a big deal. One way to really improve your trading is to minimize losers. Losers work against you geometrically more than winners do. It is just a fact. So let me see if I've obfuscated this just quite enough. Big word of the day. I like that word, obfuscate. Okay, hold tight. More obfuscation must be done. Data, rate filter, price return has to be in the top 10, filter by condition, top 10, less than or equal to 10. Okay, so we're taking only the top 10 based on the percent return each day, like we talked about. Having a price that's greater than $10 and actually let me change this to 4 just for now, just for posterity's sake, because we probably wouldn't take 10 trades a day. We'd probably just take 4. Okay, so I want to show you everything, but Mahesh is saying do not show everything, so apologies for that. Hold tight. You're gonna like this. Buy columns. Hide these columns. I don't remember what that data was, so that's fine. I'll just delete that. Okay, for some reason I can't delete it. That's weird. That was really weird. Okay, I think this is okay to show. Give me some grace here. Give me some grace here. Hide these extra columns here. Okay. All right. I've obfuscated as much as I possibly can. Here's what I found. Now I'll only use this particular time as an example. One thing that I found was that the losses come in clusters. The losses come in clusters. So I was looking at this for a few hours today, and I'm like, okay, maybe we could make a rule. And if we make this rule, it'll help us reduce our losses. And so when I was looking at this rule, I was throwing it at Scott, and I was like, Scott, you know, I want to make sure that if we are in the middle of a losing streak, we don't keep in the middle of the losing streak. We just get out, right? We get out of the market. This is really cool. I couldn't believe that this turned out the way it did. But there were 5 instances over 5 years. So this is not very common. This is a very, very rare instance that whenever you have 3 losing trades on a single day. So this is the rule. 3 losers in a single day. And so I went through, this is not on entry dates, this is on exit dates. If on an exit date, you have 3 losers in a row, you are not allowed to make new trades for at least 1 week, but you can keep on your existing trades. So for example, we had 3 losers here. Boom, boom, boom. 4 losers here. -8, -14, -2, -12. You're not allowed to trade on that date, or at least for the next week. And you can see we just avoided 4 more losers on that date. So I was like, that's cool. And Nate's like, yeah, I love this rule. Yeah. And it doesn't happen often. It doesn't happen at all that much. Bert says, for me, it says no trades in January. So that was part of my frustration looking at this data. I'm like, January sucked so hard, but that was when the deep seek thing came through, and like the whole market got rocked. I'll show you when this was. That was these candles right here. Right. It did recover eventually, right? You know, about a month or so later, but it was a huge 2.4-ish, 2.5% sell-off on the market that hit all of these at once. And so making this rule was really cool. Hang on. Making this rule was actually really, really cool, because when I figured this out, this actually, every time, 5 out of 5 times that this happened, was the date when we stopped trading for at least a month. What does that mean to you? That means we can look at this and we can say, if we have 3 losers on a single day, the market's not working for us. Don't put on any new trades. And more than likely, we actually won't be taking any trades for a while anyway. Because you can see right here, it went from January to May. On this one over here, it went from September to November. On this one here, it went from January to May. Like legit, January to May, who would have thought? Legitimately, it absolutely got us out of the market a day earlier than we would have had otherwise. Not only a day earlier than we would have had otherwise, but less losses. How cool of a rule is that? So Chris was a very, very happy boy when he figured that out today. So that is a new rule, a new permanent rule. Doesn't happen very often, but when it does, that is a big get out of the way. Now, it's no new trades. If we have existing trades on, follow the plan and get out of those. But that is the rule for no new trades. And most likely you're going to be getting out of everything anyway. So that is those are the new changes. So what I want to do next, did Mr. Ross, the boss, Chris, I wanted to make sure I asked Scott. Yeah, dude, if you had a genius on staff, wouldn't you be asking him? Dude, bro, Michael Ross, the boss, I want to help you out. Let's see. Hang on. Let's see. Let's see. Oh, there's Scott right there. Scott is here. Either way, Michael Ross, the boss, he put a message in Discord where he was needing a little bit of feedback on rolling some options. What do you need? Okay, there we go. Yeah, there we go. There you go, my friend. Okay, cool. That helps me. Let's go to this. So Michael Ross, the boss, has two big winners in Pan W and Baidu. That's what I needed, my friend. Pan W and Baidu. He has multiple rolls and not sure if I found the best roll 2 points. There has also been an anomaly. I don't know how to backtest, but while I trade late in the day, rolling options early in the day, when there is irrational exuberance early, I think I saved money as the moves came back down some during the day. So that's a great point. You can roll literally anytime. Literally anytime. You put on the trade at 2 p.m., you can roll it at 2:07. Like you can actually roll at any time and take in a credit. But you want to wait until you have a reason to roll. Right? I know that sounds crazy, but let's just go to Pan W for example, real quick. So let's go to Pan W. And let's say that you're in the 160s and you're like, you know what? I don't like the 160 anymore. I want to roll it up to the 165. At this very moment, I could take in a credit of 493 to do that. So yeah, it's it is able to be rolled at any time. But you want to trigger to say, okay, now is a good time to roll. So that would be the first thing I would say is that the markets are going to widen and they're going to contract. When I say widen and contract, I mean the bid and ask spread throughout the day. This is one of the major regions. I will not put a stop loss in based on the price of the option ever, because your stop can get hit with no reason at all just because the options price is widened out, and it freaking sucks. Freaking sucks. Okay. I de-risked the amount by taking profit at a higher price at roll, and my new position was lower overall dollar risk. Perfect. 10% loss makes more than 10% gain to recover. Yes, it's 11%. So a smaller dollar risk would benefit. I'm still in the trade if it keeps going up. Not sure. Looking to roll or pick the wrong option. Certainly don't know the answer to this. You're good. You're good. You're good. Scott did say something. What did Scott say? I think with the longer trades, rolling may have to be a bit more tactical as each ATR may not be feasible. Okay. So to Scott's point, if you're in a trade and you're rolling up many times, that would be a great opportunity. That would be an amazing trade, by the way. Scott is actually working on plan B. Scott is also working on swing signals, which we're going to call plan M for money. I like that. Scott came up with that. I love it. I thought it was brilliant. So to Mr. Ross's point, where would we want to roll? For me, let's say that we were in this options chain right here, right? There's no liquidity. So I wouldn't even be entertaining anything over here. No way. I'd be looking to roll out if I needed to, and there's no liquidity here. Go out a little bit further. There's tons of liquidity here. Anywhere from 170 and down, you've got tons of liquidity. I imagine you're probably in the September 19th, just based on liquidity numbers here. Maybe the September 26th, maybe. But in this case, right, if you can't roll from the 180 to the 185 for whatever reason, I would look to roll out. Now, the key here is that you need to make sure you're still rolling out for a credit. But of course, in my opinion, the same liquidity standards would always apply. If you can roll from the 180 to the 185, take in a credit, and you have low extrinsic value, high open interest, you're good to go. No problem there. But let's say you're rolling out from the 180 on September 26th out to October 17th. This could be a little tricky because if you go over to the 180 again, that will be a debit. That is a debit mid price of 150, give or take. So you don't want to do that, of course. You'd want to try the 185. There you go. There's your credit, $2.50 credit. So you're rolling out and you're rolling up. Does delta still matter as much or liquidity? Okay, good question. Good question. I would focus more on liquidity. At this point, you've already made a buttload of money. You want to make sure that you are still in the trade, right? Your delta is going to go down, right? By how much is really going to determine, right? If we went from here, we're at 180 or we're at 86 up to 73. I'm not concerned going from 86 to 73. I've already taken multiple rolls. I'm already making bank on this. I'm taking a credit, so I'm reducing my risk even more. And let's say you had 355 over 1417, 1417 or 1470, 1470. That's 24%. That'd still work. That'd still work. If you can get delta and liquidity, great. If you can only get one, liquidity always trumps everything. Liquidity trumps all. You're welcome, dude. I love you, man. Glad you're here. All right. What if there's no liquidity within the next 21 days? So keep rolling out if you can, right? Look for the liquidity. I want at least 250 open interest, and I want at least my bid and ask spread to be under 50 cents. Now, if you can't roll out to that, like let's say you found, and this could happen. I'm definitely not saying that you're a crazy person. This could totally happen. There's one expiration where all liquidity is. You go out in time, nobody else is there. I have a rule for that. I have a rule for that because it's happened. Let me zoom out. If you get to the Friday before expiration and you can't roll out and up for a credit, now's the time to close it. Now's the time to close it. If you closed it, then are you leaving gains on the table? Potentially, yes. But you're doing so from a risk first perspective, because the closer you get to expiration, what happens is called gamma risk. Your gamma risk explodes. What does gamma risk mean? Gamma risk means that the likelihood of your strike being out of the money and having no value ramps up tremendously. Why does it ramp up tremendously? Because there's less time. Because there's less time, right? So let's say Pan W goes down $5 tomorrow, and you're in the 190s. We'll just use this as an example. And that expires, actually, let me use the 192.5 as an example. You're in the 192.5 and it goes down by $5. So now it's 191. Tomorrow, your option is nearly worthless, right? However, that's at the 75 delta. If we go further out in time to here, and we're at the, what delta was that? It was at the 75 delta. We go further out in time to the 75 delta. That's 185. Even if it drops by $5 tomorrow, I'm still $6 in the money. So that is why we don't want to have that gamma risk, right? Because listen, if this goes down $5 tomorrow, yes, you're losing, but you're not losing everything. If this goes down $5 tomorrow, you're potentially going to lose everything. I don't want that to happen to you. So in that case, I will never hold a trade that is within 1 week of expiration. That's a great question. Alan said it's happened to him too. So in that case, just time to move on. Click it, get out of the way. Something just clickered. Didn't understand it till now. Oh, very cool. Very cool. That's my job, Scott. That's literally my job as a professional YouTuber / trader. Okay, so here's what I want to do now. I want to run through the plan. Let's run through plan A as if we were going to trade it today. Zoomy. Now, of course, I will have all the slides at some point in the future. Don't stress. But for now, we just have a list. And the list makes things easier. By the way, the random guy on our Discord / Graham, the random guy has already built a little cheat sheet. So I appreciate that. I am definitely going to be using that because I like the idea of there being a one-sheeter. This is what to do. X, Y, Z. Follow the bouncing rabbit, right? Or follow the bouncing baby. One sheet. And then what does each one of those things mean from the one sheet with the slide explaining that? I think that would be really useful. Manny says, yeah, yes, please. I know, right? A flow chart. Shut up. Sometimes I forget words. I'm sure you've never done that either, Mr. Soul Invictus, with your incredibly chiseled abs. Anyways, so first, we want to see a buy signal on the SPY. Let's go check it out. I'm pretty sure we still have a buy signal on the SPY. Let's go look. Yep, still got a buy signal on the SPY. All right, cool. So the next step is the market trend up. Let's go take a look. Random guy is awesome. There he is right there. You're welcome. All right, so what is the trend of the market? The trend of the market, as you can see with the beautiful green background, is still bullish. You can, of course, go to a chart, go to today, and see we still have the 10 over the 20, price over the 50. New all-time highs set today. That's great. That's great. So we have a buy signal. We have the market trend. And now we want to see the full stocks breadth over the 10 EMA. And so this is no different than what we've always had. Trend, signal, breadth. No different here. Let's go to breadth. And we can zoom over. And we can see we have bearish breadth still, meaning we're getting more and more sell signals and not more and more buy signals. So for me, that would stop me in my tracks and say, you know what? It's not set up. And that is part of the game. Filtering down, seeing, does this hit? Does this hit? Does this hit? If not, that's where you stop. You sit in cash and you don't have up. But let's continue on. The SPY heat map is below 70. I saw that today. We are at 69.19. Okay, so that's good. Except the SPY heat map is falling, meaning even though we are pushing new all-time highs, we have more sell signals and buy signals. We have falling greed. This, and I can tell you based on my YouTube stats that people are not interested in the market right now. The interest in the market is going down. That's part of the game, right? We want to be there. Like, I'm not just pulling this out of my backside. We actually want to have this happening, right? We want to have all these people screaming buy, 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 buy. But when they've reached an apathetic point, did somebody say sell? This stock's really going to excel? Sell, sell, right? I feel like we're right at this point here. We're right at this point here, the crossover point. Where am I getting that from? Breadth not being strong. I'm getting that from the fear and greed going down, right? This is where I'm getting this from. So let's go to the next step. By the way, this is why you have a written trading plan, because if you are using a written trading plan, you can always go back to it. Doesn't matter if your cat walks in, jumps all over your keyboard, you spill your drink, somebody's knocking at the front door, the electricity just went out. You can say, whoa, that's fine. Let me go take care of these things. I'll come back. Okay, let me pick up where I left off. Then you don't have to stress, right? David says, let's also include the YouTube breadth metric. Dude, I have that metric. Do you want to see it? You want to see it? I have that metric. So one of the ways that I finally got traction on YouTube was I figured out why I wasn't getting views, why other people were getting views, right? Anytime my velocity scale, this is what I named it, is under 1.5, people are disinterested. One video in the top 10 of these financial influencers I'm following, one video is outperforming 1.5%. That's it. That's it. Now, when things are clicking and running, this is like 6%, 8%, 10%, and it's all across the board. So I'm telling you, like legitimately, I have the data to back this up. Okay. So now we'd go into the sectors. So what we want to see is the sector bull list percent over the 10 EMA. Again, no nuances here. Just, is it over the 10 EMA or not? The tech sector is the one. The tech sector is the one sector that is over its 10 EMA on breadth. Okay. The sector constituent heat map is rising. So let's go to tech stock. Let's go to NVIDIA. This is a tech stock. Bro, I don't even have a copy of the cheat sheet just yet, Zaza. I don't even have that yet, but relax, it'll come. Okay, so we're looking at the constituent heat map. what this measurement here is on all of our charts, this particular chart that we're looking at right here is the average fear and greed score for everybody in this sector. There are 90 plus 244, let's just call it 350-ish companies in this sector. On average, they're at 60.32. You can also see what that looks like over here, how many companies are greedy versus how many companies are fearful. You may have never even looked at this before. That's representing right here. So the sector constituent is rising. We see this right here. We're getting more and more greedy in this sector. But it needs to be below a score of 70. So we talked about the SPY being below 70. We also need to have the sector below 70 because once it gets overheated, right? Once the heat gets too high, we want to keep it a nice cool 70 degrees, right? Anything over that, that's just too hot, right? Too hot up in here. I got to take my jacket off, right? So this is at 60.32. There we go. Very cool. So that's a great start. Now we need AS1 and AS2. So I did see some people talking about this in the Discord. Take a screenshot of this to keep it forever. AS1 is when the market has a donkey channel score of 1, at least 1, and the sector has a donkey channel score of at least 1. I renamed these. They used to be backwards, but I thought it was harder to remember. AS1 means at least 1 on the market and 1 on the sector. We can remember that. Easy. AS1, 1 and 1. Yes, I get that, Cody. I appreciate that. I get that very much. AS2 means you need to have a 2 in the market. You must have a score of 2 in the market and nothing on, or not nothing, anything on the sector. Anything in the sector at all. So that's why I renamed these. Makes it super easy. Now, what in the wide world of sports are we even talking about here? What are these donkey channels? This is the amount of stocks getting more uptrends versus the amount of stocks getting more downtrends. If we go to the tech sector, we can see we have a donkey channel score of 0 today. In fact, it even tells you right there. Right there. My cursor can't keep up with it. Right to the left of my cursor, it'll tell you what the score is for the day. And if that's too hard to see, over here, it'll even tell you what the score is for the day. So easy, so easy. So it's a score of 0 in the tech sector, which also is that. And then we can go to full stocks, and we can see it's a score of 0. So our combined donkey channel score does not fit either AS1 or AS2 because we have a score of 0 on the market, 0 in the sector. Easy enough, right? So that would also stop you in your tracks. Relative greed. Relative greed. This is a really, really cool metric. One of the things that came to me in my sleep one night. In fact, I actually had been tracking this in my personal portfolio tracker for months. And then I threw it at Scott, and I think Scott at one point was like, oh, that doesn't matter. And I'm like, just try it. And he's like, well, wait a minute. Wait a cotton picking minute here. That's awesome. So relative greed means if we're looking at the sector, does it have more greed than the market? Remember, the SPY is at 69 point whatever. This sector is at 60.32. So the relative greed is under the market. We don't want that. We want the hottest, most exciting sector there is. So there's another reason why we wouldn't trade it. And healthcare is permanently excluded. Please don't obfuscate any of the donkey channel checkpoints. Now we're down to the stock. Let's go to NVIDIA. I pulled that one up. Right. Looking at NVIDIA. It has a sell signal. I'm not going to trade NVIDIA with the sell signal. I don't encourage you to trade anything with the sell signal. By the way, that sell signal came on August 4th. What's it done since August 4th? By the way, you can make your charts look exactly the same as mine. Go get a free TradingView account and get the free deep thought indicator, and your charts will be exactly the same as mine. It looks to me as if literally no price change has happened since August 4th to today. And if you were holding NVIDIA, I don't know why I had this 50% down measurement here. I forget. If you were holding NVIDIA, you probably be not enjoying life, as it had a downtrend until maybe the next couple days. This will cross back over. We'll have to see. A close under the 10 EMA. Now, the 10 EMA is my trailing stop exit. The 10 EMA is your short-term trend. Let's go look at that real quick. Is this useful to you guys to go through all this, right? I know you've heard all this before. But is the repetition useful, or is it just too much? The 10 EMA is the indicator of the short-term trend. The short-term trend is where you want to stay, where you want to be in front of, right? That's where you want to go. Let's go back over here. So you can't ever buy a stock that is under the 10 EMA because that's already past your exit point. The stock has to be trending up, and we just discussed NVIDIA is not trending up just yet. It may be up on the day, but not up overall. And the stock heat map has to be rising. And it is not. In fact, the stock's heat map is falling. It's getting more and more fearful. And it must be above the previous low, which it is today. So no issues there. And the price not hitting any order blocks that are at least 120 days old. And if there is an order block, we want at least 2% of space. So there you go. This is what plan A looks like. We're planning on multiple plans to have more opportunities to trade. But plan A is my best expectancy overall, and I'm very excited about it. So that's going to be it for now. But of course, we will continue to go through this. I will continue to make the PowerPoints even better. And I got to tell you, it's just way less fun without Joe around. Joe makes this way more fun. Thanks for coming to this invitation-only live stream. If you are watching this on the replay and you want to save time, make money, and start winning with less risk, click one of those 2 videos right there and have a fantastic day. We'll talk soon.